ETH investor faces $100 million loss after Sky DeFi liquidation amid market crash. DeFi. Ethereum. A massive $106 million Ether liquidation on Sky highlights DeFi's vulnerabilities amid a market-wide crash triggered by Trump's tariff policies. Ethereum faces mounting pressure, risking further declines and potential shifts in crypto market rankings. Last updated, April 7, 2025. Journalist, Hassan Shittu. Journalist, Hassan Shittu. About author, Hassan, a cryptonews.com journalist with 6+ years of experience in Web3 journalism, brings deep knowledge across crypto, Web3 gaming, NFTs, and play-to-earn sectors. His work has appeared in Author Profile, Share, Copied. Last updated, April 7, 2025 at 15:25 GMT+3. Why Trust Cryptonews? Cryptonews has covered the cryptocurrency industry topics since 2017, aiming to provide informative insights to our readers. Our journalists and analysts have extensive experience in market analysis and blockchain technologies. We strive to maintain high editorial standards, focusing on factual accuracy and balanced reporting across all areas, from cryptocurrencies and blockchain projects to industry events, products, and technological developments. Our ongoing presence in the industry reflects our commitment to delivering relevant information in the evolving world of digital assets. Read more about Cryptonews. A massive DeFi liquidation has raised eyebrows after an ETH whale was liquidated on Sky, formerly known as Maker, losing 67,570 ETH valued at approximately $106 million. The position was wiped out as ETH, tumbled over 14% on April 6, causing the collateral ratio of the whale's vault to fall below the critical liquidation threshold. According to data from DeFi Explorer and LucanChain, the liquidation was triggered when the collateralization ratio dropped to 144%, just under the platform's required 150%. This allowed the Sky protocol to seize and auction off the ETH collateral. Sky, a rebranded version of the MakerDAO lending platform, allows users to lock up ETH as collateral to borrow the decentralized stablecoin DAI. The protocol enforces an over-collateralization policy, requiring users to deposit significantly more ETH than the value of the DAI borrowed. When the market value of ETH plunges, collateral ratios shrink, and positions become vulnerable to automatic liquidation. In this whale's case, the market crash proved catastrophic. The timing couldn't have been worse. With ETH falling to a 7-month low of $1,547, marking its steepest single-day drop since October 2023, the protocol's automated liquidation system kicked into gear. Over a few hours, the whale's once massive position vanished, making this one of the most high-profile liquidations in DeFi history. Whales scramble to save positions as ETH collapses. The situation quickly escalated beyond a single whale. Spot on Chain reported that another large holder, with 56,995 wrapped ETH, approximately $91 million, used as collateral, narrowly avoided liquidation by making emergency capital injections. Meanwhile, another anonymous whale, on the brink of losing 220,000 ETH, valued at $340 million, took drastic action. According to LucanChain, the investor deposited an additional 10,000 ETH, worth around $14.5 million, and 3.54 million DAI to stave off liquidation. These deposits raised the position's liquidation threshold and temporarily bought time against further ETH price declines. However, the scale of market-wide damage was unprecedented. CoinGlass data revealed that over 446,000 positions were liquidated in a single 24-hour window, with total losses surpassing $1.36 billion. A staggering $1.21 billion of those were long positions, showing just how quickly bullish bets were undone. The single largest liquidation recorded was a $7 million Bitcoin position on OKX. With Ethereum dropping below 0.02 BTC, a psychologically significant ratio not seen since early 2020, analysts warned that ETH BTC could slide further to levels last seen in September 2019, 0.01615 BTC, or even March 2017, 0.0128 BTC. If the trend continues, ETH is now down 44% against BTC year-to-date and remains 79% off its 2021 peak when DeFi and NFT mania drove demand. Trump tariffs trigger global panic and crypto meltdown. The crypto market collapse didn't happen in isolation. The catalyst behind the rapid downturn was a wave of macroeconomic fear, sparked by U.S. President Donald Trump's announcement of sweeping tariffs. On April 2nd, Trump unveiled a package that included a 25% tariff on vehicle imports and a baseline 10% duty on all imported goods, coupled with reciprocal tariffs targeting countries with trade barriers against the U.S. The announcement sent global markets spiraling. The S&P 500 suffered its worst two-day loss in history, wiping out $5 trillion in value. Crypto markets soon followed suit. Bitcoin dipped below $75,000, and major altcoins like Solana, SOL, Ripple, XRP, and Dogecoin, Doge, fell by over 20% in a matter of hours. XRP broke below its 200-day moving average, SOL plunged under $100, and Doge crashed to 13 cents. Even traditional markets weren't spared. The Hang Seng Index dropped over 12%, while Japan's Nikkei 225 fell nearly 7%. U.S. stock futures plunged across the board, pointing to a chaotic start to the week. Amid the panic, safe havens like gold and the Japanese yen saw renewed demand, further draining liquidity from the crypto market. Billionaire hedge fund manager Bill Ackman voiced concerns, urging Trump to suspend the tariffs for 90 days. In a strongly worded post, Ackman warned of an economic nuclear winter, claiming the business community was rapidly losing confidence in the administration's leadership. "This is not what we voted for," he said, noting that confidence is paramount in business, and the president's current trajectory threatens to undermine that trust. Despite the chaos, some believe this could signal the market's bottom. Nansen Research estimates a 70% chance that the market could bottom out by June, depending on how tariff negotiations unfold. Meanwhile, the fallout from Black Monday continues. Ethereum now trades around $1,515, and Tether, USDT, is within striking distance of overtaking ETH by market cap. If the bloodbath continues, ETH could lose its position as the second-largest cryptocurrency entirely. With over $1.36 billion liquidated in one day, the market's message is clear. Risk appetite is fading fast, and unless prices rebound, more whales could soon meet the same fate as the $106 million Sky liquidation victim. Follow us on Google News. Trending news. Recommended popular crypto topics. Price predictions. How Tether co-founder William Quigley views crypto regulations in Trump's second term. Trump appoints PayPal veteran David Sachs as White House AI and crypto czar. Emerging address poisoning attack on Bitcoin blockchain. Casa executive warns crypto liquidations surpass $1.3 billion as markets continue to crash on Black Monday. Bitcoin tumbles 6% to $78,000 as U.S. markets reel from Trump tariff shock. Altcoin news. BTC, SOL, XRP drop 20%. Billionaire Bill Ackman calls for 90-day pause on Trump's tariffs. For hours ago, by Ruhalaman Hakanas. Price analysis. Will Bitcoin explode higher from this crash zone? $85,000 triangle says yes. 5 hours ago, by Arslan Butt. Features. Why is crypto crashing? There's just one reason. For days ago, by Connor Sefton. Best crypto to buy now in April 2025. Top crypto to invest in. February 19, 2025, by Inesis Tavares. New crypto coins to invest in April 2025. March 12, 2025, by Inesis Tavares. 9 best crypto presales to invest in now. Upcoming token sales. March 3, 2025, by Medb Keely-Cuddy. 10 new and upcoming Coinbase listings in April 2025. March 3, 2025, by Elijah Rankovich. 12 new and upcoming Binance listings in 2025. March 3, 2025, by Inesis Tavares. What is the next cryptocurrency to explode in 2025? September 11, 2024, by Elijah Rankovich. Bitcoin, BTC, price prediction 2025 to 2034. October 19, 2024, by Leon Waters. Ripple, XRP, price prediction 2025, 2026 to 2030. August 28, 2024, by Eric Huffman. Ethereum price prediction 2025 to 2030. Will ETH bounce back? August 28, 2024, by Ben Beto.